What's up, guys? It's Nathan here. If you've been keeping an eye on the mortgage market lately, you're likely to be aware of some pretty significant changes coming through. Specifically, we're talking about Commonwealth Bank and its decision to discontinue its $2,000 cashback for mortgage refinances. This change is coming effective from the 1st of June. According to the latest ABS figures, a record $21.22 billion worth of loans were refinanced in March alone. This staggering number is part of an even bigger $206 billion, which has been refinanced since the rate hike started in May last year. Now, you might be wondering why Commonwealth Bank would try and stop this lucrative deal. In more recent times, we've been seeing lenders increase their incentives they've been provided to borrowers. So previously, it was pretty uncommon that you could get a $2,000 rebate. Then every bank started doing that. And now there's lenders giving $4,000 rebates. There's even some giving $5,000 and above. We even saw some lenders giving rebates just for purchases. So Commonwealth Bank, who account for over 25% of the residential mortgage market, are trying to signal to the market that this needs to stop because it is affecting their profitability. So it's not good for us as a consumer that Commonwealth Bank is doing this, because what they're trying to do is get the rest of the market to move with them, which is effectively to stamp out rebates and cashback incentives, which are quite lucrative. And in a lot of cases, a $4,000 rebate might actually be more worthwhile to take than taking the lowest rate option. Because in an example where maybe you're getting a 5.24% rate with a low rate lender that's giving a cashback of $4,000 as an example, versus a lender giving you a lower rate by 0.1%, well, that lower rate on a $500,000 mortgage is only $500 per annum difference. And that's where taking a higher rate with a $4,000 rebate makes a lot of sense and can help those lenders with the large rebates take a huge chunk of the refinance market, because a lot of borrowers are happy to take $4,000 to refinance, even if they're on a slightly higher rate than their current bank. So we can see here, Commonwealth is trying to stamp that out because the refinance market is rife. A lot of people are looking to do that, especially with the rate hikes. And we've seen with the recent bank profits and the banks coming out to the market on the ASX, talking about their net interest margins being squeezed. They are doing everything to try and keep their margin on loans. And this is one example of how Commonwealth Bank is trying to get the rest of the market to follow suit. We've also seen Commonwealth Bank recently pull back on some of their pricing. So as I said before, it wasn't uncommon for you to be able to get variable rates in the 5.24s, 5.19s as an example. Commonwealth Bank has stopped being so competitive in the rate market. So what they're also trying to do is signal to the market that no, we can't be doing rates at 5.24s anymore. The rates should be around the 5.4s. So once again, they're starting to pull back, trying to get the rest of the market to flow through with them so that they can really maintain their margins. The difference between existing customers and new customers from a rate perspective is about 0.5%. So if you've had your loan for 2 or 3 years and you're getting a new loan, the difference in what you're currently on, if you had an existing loan versus what you were offered as a new customer, is actually 0.5%. So that margin is massive. And what we are seeing is that the banks have been so competitive to increase their mortgage business, especially because they divested out of insurance game, financial planning. They've really all moved to their core businesses, which is mortgages, primarily through the residential market. They've been so competitive to try and capture market share. But Commonwealth Bank, once again, signaling to the market that they're discontinuing their cashbacks and pulling back on their rates. Their hope is that the rest of the market has to follow, because if Commonwealth Bank is doing 25% of all loans written in Australia, the smaller lenders, such as, for example, if ING is very competitive and they've still got a cashback, a rebate, isn't going to be able to handle the volume. What tends to happen here is because Commonwealth Bank is no longer competitive, other smaller providers start to get a pickup in volumes. But those volumes become too hard for them to manage and their turnaround times blow out. So typically a smaller lender might be able to turn around an application in a couple of days. As volumes increase, that couple of days might go out to a week, might go out to 2 weeks. 3 weeks, 4 weeks, and their timeframes continue to further and further blow out to the point where they can't provide services, and that's where they'll start to remove their offers like cashbacks. They'll start to bring their rates in line with the rest of the market, because these banks, and particularly the smaller banks, don't want the full pie. They want a small chunk of the pie because that's all they can handle. So really interesting thing here to see Commonwealth Bank signaling to the rest of the market that these rebates need to stop, and particularly as we've seen the reporting season, the net interest margin, which is effectively the bank's profitability margin that they talk about, has become something of a real talking point because it has been squeezed, and we can see it having come down recently. Commonwealth Bank is trying to pull that back up. Now, it's still worth noting that there are plenty of banks offering attractive refinance deals. So if you are looking to refinance and you're wanting to get, $3,500, $4,000, there are lenders still doing that. Get in touch with us here at huntergalloway.com.au. We are a mortgage broker. We can assist with your refinancing needs and get you in a better position. Particularly, as I said, if you've had your loan there for a few years now, you will find that you will be paying a loyalty tax, and it's not worth paying, especially when you can go out there, get a cashback, get an incentive to move, get a lower rate. And a lot of cases, the cost to move is only going to work out to be anywhere from $700 to $1,000. So if you're getting $4,000 as a cashback, that's cash that you get given, you can do anything with, and it more than covers all your costs of moving. I had a client that actually used that cashback to pay for flights to New Zealand. So it can literally be used for anything, and it can make a big difference, especially with the cost of living pressures we've seen recently. And it does seem like Commonwealth Bank is taking a different route and choosing to step back from the mortgage war. It's a significant move that could signal a change in how Australia's largest banks handle the heat in the home loan market. And if you do find value in this video, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. Now let's talk about some recent developments regarding consumer confidence, which has experienced a bit of a shakeup following the Reserve Bank's interest rate hike recently. Now let's look at the overall numbers. Overall, we saw consumer confidence drop recently. However, this wasn't uniform across all states. For instance, in New South Wales and Queensland, it actually buckled the trend and saw consumer confidence rise. On the flip side, we saw declines in both Victoria, South Australia, and Western Australia. Interestingly, weekly inflation expectations increased slightly. However, this was in line with the last 4 weeks moving average. Now, there were some more notable shifts. Current financial conditions took a hit, dropping to 4 points, marking the second lowest level we've seen since 2001. Contrast to this, financial future conditions edged up ever so slightly. When it comes to economic conditions, we saw some movements. Currently, economic conditions have dropped and future economic conditions fell as well. Moving to consumer spending, the sentiment around the time to buy a major household item has seen a decrease, falling by 2.7 points. This marks the 13th week in a row that this figure has remained below 70. Now let's talk about ANZ-Roy Morgan Australia's consumer confidence rating for last week, which was based on 1,500 interviews conducted online and over the phone. The rating stood at 77.7, marking a weekly change of negative 2.1, compared with a 4-week average of 78.2 and a long-term average of 111.4 since 1990. Adding some context to these numbers, ANZ senior economist Adelaide Trimble offered her insights. She believes that the Reserve Bank unexpected rate increase had likely contributed to the dip in consumer confidence last week. This result marks the 8th weakest since March 2020. It's important to note that confidence has remained below 80 for 10 consecutive weeks. This is the longest stretch we've seen below 80 since 1990-1991 recession, when the survey was conducted monthly and remained below 80 for 5 consecutive months. Did you know, here at Hunter Galloway, we're mortgage brokers and deal with people Australia-wide. There's no cost for our service, and we work with home buyers right around Australia. So if you're looking for assistance, feel free to get in touch with us. Call us on 1300 088 065 or visit our website huntergalloway.com.au, where we can do an assessment, run through your options, and see where you land. Guys, as always, thanks for watching, and leave a comment below as to what your thoughts are around Commonwealth Bank stopping and discontinuing the $2,000 cashback, as well as increasing some of the rates. Do you reckon they're trying to get the market to move in line with them and remove these cashbacks?